Hey guys, welcome to the webinar, Get Your Tax Questions Answered with CPA Don Weimer. Can everybody see me and hear me okay before we get started? Want to make sure you guys can see me and hear me okay before we get started. Go ahead and type yes into the chat box just so I can know that you can see me and hear me okay. Hi, Rebecca. Hi, Megan. Perfect. Hi, Nikki. Hi, Alexis. Hi, Michelle. Wonderful. I'm glad that you guys are here. So tax season, this is a really, really important topic that's not the most fun thing to talk about for most people, not Don, but it's wonderful that we have people like Don in the world that can help us with these kind of things. So as you guys know, I posted a list of questions for you guys to ask that you wanted to know from a CPA. So what I'm going to do is go ahead and read through. I've got the list of questions posted up on my monitor, and I'm going to read through those. Don's going to provide an answer. And then after the webinar, I'm going to send out an email, and it's going to have a printout, or something that you can print out that'll have an itemized, the list of itemized deductions that you guys can use, and just some of the other information and Don's contact information if anyone wants to reach out and work with him. He's offered some really amazing specials. If that's something that you need. If you just want to ask Q&A and listen to this, that's great too. So without further ado, I'm going to go ahead and introduce Don. Don, thanks for being here. You want to go ahead and give us a little bit about your background?
Yeah, thanks for inviting me. I'm actually a CPA in North Carolina and Arizona licensed. I can work in every state. But I happen to be married to an esthetician, so I'm very familiar with the industry. It's actually how we linked up here, and thought it'd be a great idea to answer a lot of questions that are really time sensitive, and now's the time to discuss them. So my background, I've been a corporate accountant for 20 years. And that's my background, is understanding businesses and what they do. So it's not just the tax side of things, but it's actually how businesses work, the details of financial reporting, cost of goods sold, and really how to maximize every dollar that you bring into your business.
Perfect. So I'm going to go ahead and just read verbatim the questions that we got. I've got about 5 or 6 questions listed here, and then we'll have time for Q&A at the end that you guys can ask your questions. So first thing, we had a lot of interest in deductions. So can you share with us a little bit about the types of things that can be deducted, and what's the best way to keep track of these things?
I certainly can. The general IRS rule for deductibility is whether those items were necessary and customary in your industry. So as estheticians, you guys aren't going to be deducting the cost for your shampoo, or the cost for things that would not be normally associated with an aesthetics business. If you run a car dealership, you're not going to be deducting things that are associated with an esthetician's business. So that's where it starts. It starts with, is it normal and customary in your industry? And from there, it really runs the gamut. Some of the most common deductions are rent, insurance, all your supplies. If you buy creams, lotions, cleansers, toners, whatever it may be, that's all deductible. Some of the more interesting items that people forget about are your licensing fees or any continuing education expenses that you have. Those are also deductible. And most people don't think about that because you just kind of pay your license fee and you pay your insurance renewal and you go on with life. Those are deductible items. Your uniform costs are deductible. And we've prepared a list, and I think that's going to be sent out. It's some of the most common ones. Really the ones people tend to miss, though, are the insurance and licensing, any of the professional associations you join, things like that. Your accountant fees are deductible as well, so that makes me happy.
What about, I don't remember if I have a question on this or not, but I think that I saw some car expenses. If you're driving to and from work, does that fall into the gamut of what you were just talking about?
So car expenses are probably one of the most misunderstood deductions. You cannot deduct your commute to work, okay? Even if you're self-employed. You can't deduct the mileage from your home to your spa. What you can deduct is mileage if you run out during the day from your spa to a supply house to get supplies. You can deduct that. You can deduct your mileage if you're doing mobile services. You can deduct the mileage to the customer site and then back to your spa. But you can't deduct just your commute. It's everybody has to commute, and the IRS doesn't give you a break on that. One of the other common misconceptions is if I put a magnet on my car or wrap my car, that I can just deduct my payment. You can't. The IRS will say no, and they'll disallow that under an audit. And this brings up a point with all these deductions. You have to look at a cost benefit. You can really push the limit of what might be allowed and save maybe $1 here or $1 there this year. But if you look at what that's going to cost you down the road, if the IRS comes back and disallows it, you really have to think about that before you say, yeah, let's just deduct everything we can. One of the other common items that are misunderstood are meals and entertainment. As estheticians, it's not really common and customary to take clients out to lunch and then pay for that. You're performing a $100 facial. You can't take them to a $100 lunch and deduct it. It's just not going to work. So in this industry, it's going to be very, very difficult to substantiate true meals and entertainment. One of the ones that would be deductible in most situations for you guys is if you meet with a new supply line. If you meet with somebody from Dermalogica, for example, to talk about a new line that they're coming out and they want to get into your spa and you pay for lunch, you can deduct that. But that is subject to a 50% rule. You only get to deduct 50% on your return when it flows through. So that's another common misconcepted item.
Okay, let's move on to the next one. Still speaking about deductions, is there a specific timeline that needs to be followed? For example, one of the estheticians typed in that she has been slowly purchasing equipment for the past few years so she can open her own solo practice. So with that equipment, she's been working at a spa, she's been saving up, buying equipment over the past couple of years, and she wants to go out on her own. Is that deducted in a specific timeline? Is that depreciated? How does that work for her best benefit?
The answer is it actually depends. I hate that answer, but with taxes, it's very common. It depends on the price of what she bought. Generally speaking, you can deduct all of your startup costs up to $5,000 in the first year you're open. So if you've been accumulating stuff, as long as you have the receipts for it, of course, in your first year, you would take the deduction for all that. Now, this is for smaller items, jars, facial products. It doesn't count if you bought like a $5,000 microdermabrasion machine. That's going to be set up as an asset and depreciated, over the period of its life. So large expense items like machinery, equipment, things like that, we set up as an asset and depreciate. Other things that you've been accumulating, really you just write off in the very first year you're open.
What's the dollar value to consider something an asset? Because for example, a steamer can be $100 or it can be $1,000.
Yeah, that depends on the size of what you're doing. And to me, $1,000 really is kind of a decent limit because you don't want to just keep track of a ton of low dollar stuff. So to me, under $1,000, just write it off. If it's over $1,000, set it up and write it off as an asset.
Okay.
That's more specific to the size of what you're doing, though.
Perfect. So what is the best way to handle sales tax when you're selling retail products? And do you need to have a specific license for that?
You definitely need to have a specific license for that. And that's going to depend on what city, county, and state that you're in. And the best way to do that is to find out, whatever area you're in, just Google sales tax license for that county. And it will bring you to probably the state website and then the county website. But you will need either a sales tax license, or in some states, it's called a transaction privilege license.
In Hawaii, I think it was a GE tax.
Excuse me?
I'm from Hawaii. In Hawaii, we had a GE tax.
Right, and so the name is different wherever you go, but it's basically all the same thing. It's a sales tax on what you sell.
Mhm.
And the way generally that works is you keep track of all your sales for the month. And then at once a month or once a quarter, you file with the appropriate jurisdiction. Here's what I sold. Here's what I collected in sales tax. And you need to pay that to that same jurisdiction. It's very important not to violate those laws. They get very upset when that happens. So if you're selling product, make sure that you're charging the appropriate sales tax for where you're located.
And where do people find that information out? What if they don't know? How do they find out the specific tax?
The best place to start is the Department of Revenue for whatever state you're in. So if you're in Hawaii, it would be Hawaii Department of Revenue. And again, it's a Google search. And that will get you to usually a landing page that will say, okay, for business information, click here. And you'll be able to find your way down to that, or just call them. Once you get to that page, there'll be a phone number. Call them and ask the question, and they'll get you exactly where you need to be. That's the fastest way to do it.
Okay, perfect.
And there's usually no cost with getting the license.
Oh, okay. Okay, that's good. Let's see. Here's another car question. So you may have answered this before. If you're using your car for personal use and for business use, how do you keep track of that? So you're using it for commuting, but
Right.
You're also using it for, picking up supplies or whatnot.
Right. So you need to keep track of the miles that you drive for business and personal use. In the old days, you just drove around with a notepad, and you'd get in your car in the morning and you'd write down the mileage. Write down where you went and how many miles it was. Now there are applications for your cell phone. You just put them on that and you can log your mileage, and it's easy. The App Store or Google Store is the best place to search for those. I don't recommend any other application, but that's the easiest way to do it. But you will need to have a mileage log to kind of defend what number you're taking.
Okay. And what are your best practices for filing taxes? I know that, is there a specific date that you should do this by? And as an accountant, what makes you really happy when people come in? Do you like to have all of the receipts in a certain order or certain documents in a particular order? Like what's the best way that people can be most organized and most prepared for getting ready for this time of year?
I think the biggest thing is to do it all year long.
Mm-hmm.
Keep track of everything on a monthly basis. Don't let it go till the end of the year and then you're all of a sudden scrambling to find a year's worth of information. So, once a month, you should sit down at least once a month and go through all your receipts and categorize them. Here's what I spent on advertising. Here's what I spent on supplies. So you have a list, and you can keep this handwritten, or you can keep it in Excel, or the best way is through an accounting system. Because then at the end of the year, you push a button and there's all your data. And it's right there, all the numbers.
Yeah, and there are actually, so there's a lot of accounting software out there that's free. What do I use? Wave. There's Wave apps, there's Xero, there's FreshBooks. Are any of those accountant approved? Do you like any of those more than the other?
Personally, I'm a QuickBooks provisor, so I like the QuickBooks products. They're not free. But they are pretty cheap. I think the cheapest version of QuickBooks online right now is like $12 a month. So it's still pretty cheap. It isn't free, but it allows me to, and any other tax preparer that uses the QuickBooks platform for tax, we can import your data directly into a tax return. So when it comes to tax time, literally it's the push of a few buttons and you're done. So there is no more painful collecting the shoebox receipts and sitting down for an hour and a half talking to the accountant. It's here's all my data, it's done. So I'm familiar and fond of QuickBooks, but any other package I think that you get familiar with and you're comfortable with will do the same job.
We're getting a couple of questions in here. So Michelle wants to know if you recommend an S Corp versus sole proprietor for a solo SD. So how would you choose your business structure?
I can't actually answer that. That falls under legal advice, and I'm an attorney, so I can't advise on legal structure.
Okay. And Brittany is wondering how important it is to have a business account set up.
A checking account?
Yes, like a business checking account.
I think it's extremely important. One of the reasons it's extremely important is once you get a business account set up and you actually pay for everything and receive everything into that account, if you ever are challenged by the IRS and they say, hey, you were running personal expenses through the business, it's a lot easier to say, nope, that's a totally separate account. It never touches my personal account. There's a very clean line there. And that line is very important during the time of an audit. It also keeps you organized to know what money's what and how your business is doing. Hey, how's the cash in the business doing? And keep it separated from your personal life and your personal finances, because it's important to treat it as its own business. So I think it's very important.
I know we're talking a lot about, these accounting questions pertaining to solo estheticians, but a lot of the things that you were mentioning about deductions and using your card, that also applies to estheticians who are working at a spa, correct? Or am I?
Nope, you are correct.
Okay.
Because most estheticians working at a spa are going to be under a split program. They'll be 1099 or independent contractors. And as an independent contractor, you're automatically, from a tax standpoint, you're automatically running a business. So you get the same deductions. If you're an employee at a spa, it would fall under a little different section on a tax return.
But you still want to keep track of that information.
Yep.
Okay. We have another question from Cynthia. She says, do you have to issue a 1099 if a corp is paying an individual via credit card or auto bank transfer, and or discuss 1099s? Oh, I guess she's wanting to discuss 1099s and how they work when they're required.
Okay, so a 1099 is required whenever you pay anyone over $600 in a calendar year. And I talked about this to a few people recently. If you know you're paying a corporation, you don't really need to 1099 that person. I've used Dermalogica because I'm familiar with it. If you make payments to them, you don't need to 1099 that, because they're a corporation and their tax rules fall under a little bit different section. So you don't need to 1099 that corporation. But if you're paying individuals, sole proprietors, things like that, you definitely are going to need to issue a 1099. One of the things that people miss is, if you're an esthetician and you have a spa or a few rooms, and you bring in another esthetician and you're paying her a split, you'll need to 1099 her for her portion at the end of the year if it's over $600.
Perfect. I hope that answers your question, Cynthia. Does anyone else have any questions? This is the time to ask. If you want to go ahead and type them into the chat, I'll be sure to ask Don so he can give us the answer. So if you have any questions that you would like to ask Don, go ahead and type them into the chat box. And while we're waiting on that, Don, how would you suggest finding an accountant in your area? Say, we know that you're great and you do taxes and we're going to send your information. But if someone's looking for someone near them in their area that maybe can, I don't know, that they have a specific question for, what kind of criteria are you looking for when you're hiring an accountant?
I think the easiest way to find them is start with Google, because it gets you a big collection of people to start from. But don't just take that and say, okay, this person's good. The next step of that process is to verify with the state that they're actually still actively licensed. There are a lot of people out there offering services, accounting, bookkeeping, whatever, that aren't licensed in the areas that they're in. And that's a very important distinction. If it ever became a challenge issue with the IRS that led to a tax issue, you wouldn't really have any defense there. It's, well, you just hired this guy that's not licensed to do your taxes, for example. So that's important. So I would say start with Google and then go with the state. Every state maintains a board of accountancy, and they will verify licensure. Usually you can just do it on the website and verify a license, type in a name, and it'll pop back active or not. That's really probably the best way to start out the process. The other thing is through referrals. Ask people you know. Do you know an accountant? Do you know a good accountant?
Well, what I think that's so great about you is that your wife is an esthetician, because having someone that actually understands the industry, that's really important, because our industry is very unique, I think, in what we do.
Yeah, and that's a good point, is to, once you finally get it down to a list of people, call them and ask them, what types of industries do you work with? Mm-hmm. The restaurant industry is very, very different from the esthetician industry. So you want to make sure that there's a fit there and they're not learning their industry from you. You don't want to be their guinea pig, and you don't want them to figure it out with you as their client.
So we've got a couple more questions here. So Cynthia is saying, I was told if you pay via credit card, you don't have to issue a 1099. Any validity to this?
No.
Okay. And Maria is saying, what's more beneficial tax-wise a corporation or an LLC?
That depends on a lot of different answers. The easy, quick, general answer is an LLC is usually more beneficial for tax purposes, but it really depends on the nature of your business, the size of your business, what kind of dollars are going through it. If you have employees, there's a lot of variables to that question that I really can't go into right now. But generally speaking, an LLC will be a better taxable situation.
Okay, and Michelle is saying, in your opinion, is it a red flag with the IRS to claim office out of your home?
It used to be. It's not really considered an audit flag anymore because nowadays so many industries have it. But again, look at your industry. If you're an esthetician and you're providing those services from your home and you've got a bed set up and a room and the whole deal, you should take a deduction for that. But be very careful if you work at a spa and you just simply use a shared desk at home to answer some emails. That's not really going to stand up under IRS scrutiny. They're going to come in and say, well, that's not really where you conduct your business. You conduct your business in your spa room. So again, it depends on your actual situation, but it's not the audit flag that it used to be. That's certainly true.
Okay, and let's see, Maria is asking, and can assets be claimed on Schedule C, or do you have to be a corporation LLC?
Can assets be claimed on Schedule C? You don't have to be a corporation or LLC to claim them, but again, more details are needed to where they would go specifically on her tax return. But you don't have to be just a corporation or an LLC to tax them. Again, if you're an independent contractor, you're still going to be filling out what's considered a business return.
And Brittany is asking, I purchase things before I open my business. Are those receipts valid for deductions?
And we covered this at the very beginning. Those would be valid in your first year of operations. So if it's gone more than a year, nope, they're not valid anymore. But in the first year that you're actually open for business, so to speak, you can take those deductions, and it's up to $5,000.
Perfect. So if you guys have any more questions, now's the time to ask. Otherwise, we're going to sign off. I'm going to give just another minute or two for anyone to type in their questions if they have any questions for Dawn. Otherwise, we will sign off. Okay, it doesn't look like we have any more questions. So I will be sending you guys an email, everyone that's registered. Oh wait, we do have one more question. Michelle says, you think QuickBooks is easy enough for us to do in our own to report quarterly taxes?
It really depends on how technical you are, how software savvy you are. I mean, to me, yeah, it's pretty simple. But I've spent my life in accounting software systems. So what I think is very basic and easy, you may not. What I do recommend, though, is if you want, you can get on QuickBooks and take a free trial of it. They offer that to everybody. You can just go sign on, and they will ask for a credit card. You just have to cancel before the 30 days are up. But you can try it out and play with it and see if it's something that you think you could handle.
And I don't know QuickBooks, but I do know that I use Wave, and it's very, very easy. It integrates with your bank, and all you have to do is it automatically has categories in there. So you just click a drop-down menu and say, this was a travel expense, or this was and it automatically generates those reports for you. So I think, if QuickBooks doesn't work for you, there are accounting software systems out there that are very, very user-friendly. Let's see. Rebecca says, great info, thank you. Tiffany says, 1099 if paying a room rental. I think I'll let Dawn answer that, but I think that you said if it's to a corporation, if you're renting from a spa, then the answer would be no, right? But if it's an individual solo SD, then it would be a yes, right?
And the reason I'm saying no for the corporations is because you're just wasting whatever fee you're being charged to file that. But if you don't know the legal structure, it doesn't hurt to send them one anyways. So if you are in doubt about it, just go ahead and send it. It doesn't hurt anybody. It doesn't hurt anything, but it keeps you protected. So if you're not sure, it's better to send it than not send it. But renting a room, regardless of how you pay, it depends on their corporate structures. And a lot of times you just don't know that. So for that, I would lean on the side of go ahead and issue the 1099.
And Alexis is asking if there's a maximum deduction amount each year.
Generally speaking, you can deduct, sky's the limit, but it's not going to help you out. You'll hit a limit, and it depends on your tax situation. You can roll those forward, though, to next year and the year after and the year after. So if you have too many deductions, so to speak, too many losses for this year, you can roll it forward. The limits on those depend on if you're a solo SD or LLC or corporation. So it's too much really to get into here. There are limits, though. But if you go over the limits, you can roll them into future years. So it's not just lost money.
Perfect. And Cynthia is asking, don't most of the banks allow you to categorize? Would those reports be okay for your accountant?
Depends on your banking system. I've seen some that are pretty ugly. Others I've seen that are great. So again, it really depends on what your system can produce. And with any system, it's only as good as how well you've taken care of it all year long. You know, if you think you've been 100% with tracking every one of them, you generate the reports, we'll take a look at them and see and say, yeah, that works great. But it really depends on your bank. Some of them are good and some of the reports are not as
well,
good.
And I think some of the benefits to the accounting software is that you're categorizing those, the income and expenses, but it also generates your income statement and your cash flow. Like it generates all of those accounting reports. It's not just itemizing the deductions.
Yeah, and it's not just about taxes. You know, the accounting systems are going to allow you as business owners to really focus in on what's wrong with your business, what's doing well, what's not going so well. You know, it will give you a really good idea of what you're spending your money on. So this isn't just about taxes. It's about really running your business when you're looking at accounting software.
Let's see. Brittany says, I don't have a washroom at my shop, so I wash linens at my home. Would the electric be considered a deduction?
It would, but tracking that would be so difficult, it probably isn't going to be worth it. You can deduct the detergent, buy a specific detergent for your esthetician linens only, and go ahead and keep track of it that way and deduct that. But tracking your electric would be extremely difficult to do and probably not worth the expense.
Or and maybe the time too, no?
Right, because you're going to have to install a device that's not free that will measure the electricity that machine uses. Then you're going to have to keep track every time you do a load of laundry, if it's personal or aesthetics or that. And I think by the time you look at the cost of electricity at the end of a year, you're probably not looking at that big of a deduction. So I don't know that it's worth the expense. It is deductible though.
And Alexis is asking, do we include taxes in purchases when organizing filing? I'm not sure if I understand that question.
If you're, well, first of all, if you're being charged sales tax on what you purchase, you need to sign up as a reseller with your state and provide that to your vendors so that they don't charge you tax.
Oh, creating a wholesale account.
Right, exactly.
Okay.
So that's the first piece. If you are being taxed, though, you do go ahead and include those in the cost of the product.
And then we've got one more question from Lisa. Is it necessary to file quarterly?
File what quarterly? Income?
I think it probably depends on how much money you're making.
Okay, so if she's talking about income tax estimated payments, then again, it depends on how much you're making. At the smaller dollar amounts, it really doesn't matter. But as you start making more money, it matters. So that's something that's specific to your tax situation. Payroll issues, though, payroll taxes, things like that, they absolutely have to be filed at least quarterly. But if, from an income standpoint, it really depends on how much money you're making. And again, it never hurts.
Perfect. Well, I think that is a lot of great information. I hope that all of you wonderful estheticians on the call got your questions answered. I will be sending out, Dawn made a cheat sheet of deductions that you guys can print out. So I'll be sending that out along with Dawn's contact information. If anyone is needing an accountant or wants someone to work with, he's got some great specials for the Aestheticians Connect Facebook group. So I will include that as well. And I hope you guys all have a very, very wonderful day, and I'll talk to you again soon.